As we saw in today's Wall Street Journal, many investors are putting their money back into stocks 5 years after the financial crisis, and just as the U.S. economy seems to be gaining a little bit of steam. Well, here at today's big Charles Schwab Investor Conference in Washington, the individual investor was never far from anyone's mind. After all, the 2,000 registered investment advisors in attendance manage the money of thousands, tens of thousands of affluent retail investors. But when I asked Schwab CEO Walt Bettinger what he was seeing in his retail business, his answer was a bit of a surprise. So, Walt, there's been a lot of talk that the retail investor is back. Is that what you're seeing in your business?
Well, it's really not what we've seen if back is defined as people pouring into the equity markets. What we have seen is investors are highly engaged with their portfolios, but we don't see them saying, I've got to be in the markets, I'm putting all my money in, the market's going up, this is the time to buy stocks.
When you say highly engaged, what does that mean?
Well, it means that they're looking at their portfolio on a regular basis, they're planning around their portfolio, they're looking at the long term, but they're certainly not timing the markets.
Are they afraid? Are they complacent? Are they bullish? What?
I think they're concerned. 2/3 of our clients have indicated that they expect a market correction sometime in the next 9 months. That's a pretty high statistic for us historically. At the same time, they know that being in the markets for the long haul is probably the right strategy, so they're not looking to bail out either.
When Chuck Schwab started this company, one of the selling points was that we were going to give the individual investor a fair shake, a low commission. They were buying and selling stocks. Is that still the main part of your business, or is it more sticky money, less trading money?
Well, it's an important part of our business, but it's a very small percent overall, maybe 15%. The vast majority of our clients today are long-term strategic investors. And today what we do is provide services that help them manage that money, I think again at a great value, just like Chuck started out with, but it's a quite different business model than it was 40 years ago.
I assume some are still buying individual equities, but an awful lot of them are buying ETFs, aren't they?
You're exactly right, Tyler. Individual equities, for the most part, have been replaced by ETFs for many investors. The idea of buying that single company and hoping you're right just doesn't measure up to buying a portfolio of companies. So ETFs continue to grow.
We're here in Washington for this big event, 2,000 registered investment advisors. How concerned are your clients about what they see going on in Washington? And are they more concerned about the budget and debt mess, or are they more concerned about the Fed?
I think they're a lot more concerned about the Fed. I think many of our clients look at the politics of what goes on in Washington and they almost brush it off. It's been going on for so long that it's not something that drives their decision making. The Fed, on the other hand, is a whole nother story. The Fed is pumping money into this economy, buying their own issued debt, the Treasury issued debt instruments. No investor knows how this ends up. How does this unwind? And that causes a lot of fear among long-term, very wise and sophisticated investors.
So what you seem to be saying is that the Fed, by its actions, has done two things. They've propped up asset prices of equities and other things, and they have kept interest rates down. Has that meant that people who would otherwise be in safe, secure bonds have migrated up the risk spectrum?
That's exactly what it means. People that counted on retirement, making 3%, 4%, 5% in bonds or CDs, it's just not possible. So they're being pushed either into equity stocks that pay dividends or higher risk fixed income. Again, I don't know how this ends. I'm worried about how it ends. Our investors are worried about how it ends. We'd love to see the Fed start to slowly unwind some of this stimulus, and that's what our clients are telling us they want.
So that's your message to presumably the new chairman, Ms. Yellen.
Well, they're a lot smarter than I am, so those decisions are above my pay grade, but I can tell you what our clients are saying, and they're saying it's time to back off a little bit of the medicine. Well,
Bettinger's comments about investors' appetite for exchange-traded funds are backed up by some hard numbers. In a survey for the conference, 55% of investment advisors say their clients want more low-expense ETFs and index funds in their portfolio.